On today's episode of Talk Mortgage to Me, I'm with my friend Jason Purcell. Jason is a 20-year mortgage veteran. He's a top producing mortgage broker. He's also a co-owner of Certified Mortgage Planners out of Lake Mary, Florida. And Jason's going to walk us through a recent scenario where he was able to find a way to yes for a particular client where if that loan didn't close, it wasn't just impacting their transaction, it was impacting two more. Jason, walk us through.
And that is the challenge. A lot of times you have so many transactions that are contingent on one closing, and we call it the daisy chain effect, for example. But my agent called me and said that another loan officer was asking for a three-week extension on the home of the seller that was going to purchase her listing, who was also a client of mine. And she wasn't willing to do it because they were already under contract for 5.5 weeks.
So let's stop there. Yeah. Another lender had this loan file for 5 weeks.
Yes.
And now all of a sudden they're going to the seller saying, oh, we need 3 more weeks. At which point, and these are true stories, like this is what happens in the trenches, that seller has 2 options. They can extend or they can cancel.
Yes.
And a lot of times if they cancel, the buyer may lose tens of thousands of dollars that they've put down a deposit because they weren't able to make the transaction happen in the timeline that was contractually obligated to do so. So your seller said, yes, I'll give you the extension, but only if you switch lenders, right?
Well, it was actually the seller of the property that this seller was buying. And my agent had that listing. And so in order for this seller to extend, he would have needed a 3-week extension on mine. And my agent said, unless Jason takes over the financing, I'm not willing to extend. And so there would have been 2 earnest money deposits that would have been forfeited. And they were $100,000 each.
Wow. So let's walk through this for those that are watching this right now. Let's start with the transaction that you were doing. What was the purchase price of the home that the original buyer was looking to buy?
$2.65 million.
$2.65 million. This is Central Florida, y'all. We're not talking Manhattan. We're not talking Miami, okay? These are huge transactions, lots of money being exchanged. And then that person who was selling the home for $2.65, what were they looking to do?
They were going to pay cash for my agent's listing at $2.45 million.
And then the person who was selling the home at $2.45 million, what were they looking to do?
They were relocating out of state and not going to buy initially.
Okay, but you had $5 million of real estate changing hands.
Yes.
If I did quick math, that's $250,000 of realtor commissions at stake, let alone 2 sellers and 2 buyers that if financing doesn't happen, they're SOL.
They're each forfeiting $100,000.
Okay, so what were you able to do that the original lender was not able to do?
I will share this is a very tough loan. Jumbo financing, there's a lot more, call it guidelines and things that you've got to work for, but on this particular transaction, not only did we have husband and wife buying the property, we had 2 in-laws that were non-occupying co-borrowers, and that's really tough to do on a jumbo loan. And then we had a gift for $250,000 coming from the other parent.
Okay, so I think it's good for the audience to know that, Fannie Mae and Freddie Mac, they set a maximum loan size every single year. And it tends to go up almost every year, although for most of our career, it was like $417,000. Yes. Now I can't even keep tabs. It's somewhere in the mid $800,000 range.
$832,750.
As of this recording, but if you go back and watch this a year or 2 from now, it could be approaching $850,000 to $900,000.
That is correct.
But if you're financing under that maximum amount, then we have a set rules and set guidelines that just about every lender and bank in America follow, right? Those are the conventional conforming guidelines.
Correct.
However, the minute you start trying to finance above and beyond that, it's kind of like take the gloves off moment. There is no standard set of rules. These rules change periodically, and each bank, each lender, each investor is going to have their own set of rules.
Yes.
So this particular loan, I would have called it back in the day, it's paperwork intensive, because you have the buyer, and the buyer has their employment and their assets. However, the buyer needed co-signers, which in the industry, y'all, we call these non-occupying co-buyers. If this was the auto industry, they just would have called it a co-signer. And they needed gift funds. Yes. So it sounds like the original lender was having issues with approving the loan when you had these extra let's just call them layers of risk.
Correct.
Okay, how long did it take you to find the right lender and the right investor who would accept this loan file with its additional layers of risk?
Yeah, I asked for a 3-day financing contingency just to allow us to review the loan to see if we actually had a viable loan, for example. I think I asked for another 2-day extension. There were multiple calls with the listing agent, with the seller, negotiating through this, earning the trust, earning the confidence to give me the initial 3-day extension and then ask for the additional 2-day extension.
And I believe you were telling me before we hit record on the camera, that still wasn't enough. Like, 'cause you found the lender, right? You found a lender who would accept this loan with the parameters, right? That's because mortgage brokers like Jason have the find the way to yes mentality, right? It's never a no, it's always a how. It's never a no, it's always a when, right? When you do this, here's how we can get you financing. So you had that mentality, but there was one more caveat, correct?
Yes.
What was that?
Yeah, we got all the way into underwriting, and the week before closing, they reduced the loan to value by 10%. 10% on 2.65 million is 265,000. That would have required our buyer to bring an extra 265,000 that they did not have. And so my wife and I stepped up personally, and we funded a second mortgage for that other 10%.
And you funded that through an LLC that you own, correct? Yep, so your LLC was able to fund it. You put them on a 15-year repayment schedule. You probably recorded it as a mortgage. So you did everything
100%.
within compliance and regulation, and I'm sure the lender knew that you were doing it.
Yes.
But that's very common when you're doing what we call portfolio lending. Portfolio lending is the lender who's actually going to be funding this looks at the scenario and they say, we like it, but we don't like it with that much money down. We want more money down. A couple takeaways that I get from hearing this story is A, sometimes it helps to get a second opinion. B, a lot of times it helps to listen to your agent. But C, if you're being told no, have you tried a non-occupant co-borrower? Meaning, have you tried to ask a family member to come co-sign? If you don't have enough money for down payment, can you get a gift from a family member for your down payment? And if you've used the gift funds you can get, you've used the money you have available, and you still need more money, can you obtain a second mortgage in order to satisfy the requirements of the lender on the first mortgage as a way to keep the transaction together, to become a homeowner, and ultimately buy what, for most of us, is our home of the dreams? Was there anything else that stood out to you about this particular situation that the audience would want to know?
I just say that not all loan officers, not all lenders are created equal, for example, and maybe that loan officer didn't have access to all of the loan products that maybe we did, or maybe they just don't dot their I's and cross their T's the same way.
Yeah, I mean, that is, I think, great knowledge and advice for any home buyer, even real estate agent, to know, is that no two lenders are created the same, right? You can have two loan originators who work for the same company, but have two totally separate experiences based on their points of view, based on how they see the world and how well they know programs, products, and guidelines. Y'all, if you find yourself in a situation that sounds similar to this, I have two options for you. If you're in Florida, reach out to Jason Purcell with Certified Mortgage Planners. The dude's great at what he does. He's one of the best mortgage professionals in the entire industry, let alone the state of Florida. You can also look in the comments below for a special link that we have. Click that link and you'll be eligible for a free home buying consultation where a lender of Jason's caliber, if not Jason, can easily assess your situation, give you feedback, provide you guidance, and where it makes sense, potentially even help you obtain the home loan that you need.